begins with a story of, oh, let me start over. Perfect. So our story begins with the story of Hurricane Sandy. It's 2008, and the best FEMA flood maps suggest that a very small fraction of Brooklyn is exposed to the worst case scenario of flooding. Come 2012, reality hits. The devastation from Hurricane Sandy is far worse than FEMA's predictions. The cost of this error is hundreds of homes destroyed, businesses going bankrupt, and millions of dollars in real estate damages. The reason for this error is that FEMA's flood maps are extrapolations of historical data rather than something that incorporates the fact that you have excessive carbon content in the atmosphere, sea levels are rising, and superstorms are now more frequent. Projections for 2020 and beyond suggest that our homes and businesses continue to be exposed to this aggravated risk, and things will only get worse. So who is best placed to solve for this? We looked at the market and we found that besides individual homeowners and business owners and even urban planners, real estate investors organized into REITs have a huge amount of financial exposure as well as the maximum market power to bring about change. In the United States, they have $3 trillion worth of properties, fully 1/3 of which is exposed to flooding. Traditionally, REITs have gone out and offset this risk by buying flood insurance from the same FEMA whose flood maps we've seen through Sandy and several other flood events to be fairly inaccurate. And by the way, their policies don't cover beyond more than a fraction of flood damage. They don't cover devaluation. They don't cover lost revenue due to disrupted operations. Climate risk assessment companies that are trying to bridge this gap today only offer relative scoring between regions. They might say that downtown Manhattan is at a higher risk than upstate New York, but I'm guessing you already knew that. The need, therefore, is to translate flood risk into dollars and cents that can be incorporated into an asset manager's portfolio so that they may be able to see the impact that's going to have on their portfolio on an ongoing basis and take action. Their actions can include moving their properties to low-risk regions so that people who live and work at those properties stay safe, or build resilience into their existing infrastructure so that, again, the people who live and work at those places stay safe. Let's look at how we might approach this need.
Now, in order to meet this need, we at CRI will devise an AI-based product that will, number one, provide high-resolution dynamic flood map. Number two, provide the dollar value estimate to the potential property damage of the selected area. And number three, provide decision support tool for smart investments. Now, at the heart of our product lies our high-precision flood forecasting model, which is a machine learning algorithm that will be trained on the time series and static hydrological data from over 600 different watersheds in the United States. Now, most of these data sets are publicly available through sites like the United States Geological Services, like NASA and CAMELS. Now, the output of this model would be a probabilistic distribution of extreme flood events into the future and their corresponding magnitude, which can be post-processed by routing over the terrain maps and the building footprints information in order to get important flood parameters like the flood depth, like flood velocity, which are the major drivers of damages. Now, all this information will then be plugged into our property damage model, which is another machine learning algorithm, which takes in relevant building information and the flood information in order to provide the prediction of the dollar value damages to the property that was selected. Now, all of this information will then be culminated into a flood damage visualization map, which shows the high-risk zones and financial values to back it up. Our users, which in this case are the real estate analysts, will be able to interact with this map through our CRI user interface and get necessary information in order to make their decisions. One of the advantages of having our product both in cloud and local separately is that the user will be able to process their information without having to upload their data into the cloud, which mitigates any data privacy issues that may arise in the future. And our models being in the cloud will allow us to constantly optimize the algorithm in order to keep improving their forecasting capabilities. Now let's look at in a little more detail how the users might interact with our product using simplistic wireframes. First, the user will have to select the property of interest, which in this case is in Wallace, Colorado. And then they have the option to run our CRI flood model, which instantly inundates a property and shows the high exposure areas in the property due to the flood. Now, after this point, they have the ability to run the property damage model, which takes in the information from the flood and the building and the property, and is able to show you high risk zones with information like the financial losses due to damage over time, as well as the property devaluation you can expect from that flood over time. Now, at this point, the product will then provide the user an option to select from various mitigation options. In this case, we're only showing 2 mitigation options. And let's say mitigation 1 is some sort of infrastructure you can build that can divert the flood away from the property and that can reduce the exposure of flood. And when the user selects that option, they're able to see that reduction in exposure in the flood map, as well as the financial losses and devaluation, as well as a rough estimation of the capital expenditure they can expect from that particular option. It is important to note that not all the mitigation options are going to be infrastructure based. It could be as simple as buying a proper insurance for your property. Now, with all of this information, what user is able to get is the information on how much reduction you can expect in terms of financial exposure from a particular mitigation option, as well as the capital expenditures. And with this, they're able to do a smarter cost-benefit analysis, and they're able to select the option that works the best for them, that maximizes the long-term profitability. This allows them to make smarter future investments, as well as make the best possible decisions on their existing properties.
Now, let's talk about the market. We're initially targeting the US market, which today is the most mature market in the world for REITs. However, our vision is also to expand to international markets in the long term. In the US only, there are over 1,000 REITs representing about 800,000 properties with a value of $3 trillion in real estate assets. Current estimates point to an exposure, as we can see in the next slide, of 17% of those assets to inland flooding, 12% of them to hurricanes, and 6% of them to sea level rise, which can amount to up to $500 billion in losses. So it is clear that REIT assets are hugely exposed to flooding in the case of extreme events. Now, the question is how many of these REITs are actually interested in incorporating these risks in their decision making. So we see a huge potential in the market. As of today, only 10% of real estate investors do a full assessment of climate change risks in their portfolios, and only 18% of them do a partial assessment only. Nonetheless, these fractions are expected to increase greatly in the coming years. Within only 5 years, we expect 70% of investors to include climate change when making investment decisions, with up to 40% of them doing either substantial or partial assessments.
For the first part of our go-to-market strategy, we decided to first target REITs located in states that have both high potential of devaluation loss due to flooding and high property value. We found out that those states were California, New York, Texas, and Florida. California is more exposed to inland flooding and sea level rise, while New York, Texas, and Florida are all exposed to inland flooding and floods caused by hurricane. As you can see in the slide, the amounts of assets and devaluation losses on those 4 states are substantial in the number of billions. Our second part of our go-to-market strategy will be to sell CRI through a subscription-based model. We'll first sell our Pro plan, which is focused on REITs that partially consider assessments of climate change risk and have a more diversified portfolio. So they're consequently more interested in damage estimates rather than mitigation options. So you can see our Pro plan will provide updated flood maps as well as property damage estimates. Once we've entered the market and gained some clients, we will develop and offer our enterprise plan, which is our most robust plan, which is focused on REITs that substantially consider assessments of climate change risk and have less diversified portfolios, so will be interested in our mitigation options. Our enterprise plan will offer flood maps, API and Excel plugins, damage estimates, and our mitigation options. Lastly, for our basic plan, we expect that smaller and other players like individual real estate investors and homeowners will buy it. Expect those clients to go straight to CRI website and download our updated flood maps, which will help them make better and more intelligent investments.
Under the subscription model, we are expecting to achieve positive cash flow in only 3 years. This is assuming our base case of 15% market penetration within the first 5 years. We estimate the SAM in the United States to be $500 million, but this number increases when international markets are also considered. For this scenario, we would be looking at a 1.7 million investment to get the venture going for the first 2 years. And with this money, we will fund the initial R&D and sales expenses. And after the 3rd year, we expect the company to be self-sustaining and do not require any additional investment.
Now we have seen the problem, our solution, the market, and also the expected financial status of our CRI. The next natural question is, what is the competition and challenges we're facing? In fact, there have already been quite a few competitors in the market, including 427, Serviced, OneConsert, High Tide, Jupiter, Zesty, to name just a few. As we can see from this positioning quadrant, the major characteristics of most of these competitors are that they cover a wide range of industries and they are consulting or online platform based. Instead, our CRI focuses on REITs and the related financial risks and provides robust and flexible software products instead of case-by-case consulting services. So our major advantage is that by tailoring our product to REITs, we can provide accurate forecasts and evaluations on flood impact in terms of dollar values. This also leads to a more scalable business model, and in which we can focus on product innovation, and this in turn enables us to penetrate other markets with a relatively low operating costs and marketing costs. Of course, there are also some potential disadvantages and challenges we're facing. First of all, the cost of switching might be high for some REITs, as some of them seem to have potentially high mental barriers based on our previous market research interviews. In addition, our business model is potentially replicable, and most of our competitors are relatively small in their current scales and in early stages, so their status, including their market shares, their business models, and so on, can only be inferred or conjectured from online public resources with certain assumptions. But we believe that these challenges can be resolved by setting appropriate technology barriers and tailored user experience of the software services we provide.
Now let's drill a bit deeper down into the logic of our business, why we will succeed. As we said in the beginning, we found in our market research that for a REIT with properties that are prone to flooding, the traditional solution was simply to get insurance. But insurance doesn't cover falling property values or lost rent when tenants move away to escape floods. Insurance doesn't cover the new climate scenario of this century. As the REITs increasingly acknowledge the new scenario, they'll become increasingly interested in using more sophisticated risk measurement tools. And also they'll become more interested in measuring climate risk specifically as part of the decision-making process. So we can help the REITs make more money by showing them where to avoid investing that they didn't see before, and potentially showing them where they can invest money that they previously overlooked because they relied on old flood risk models. What we seek to do is get first mover advantage by bringing to the market a product that is optimized for the REIT's needs. As we get more clients, we will expand to different steps of the value chain. We're talking private investors, insurance companies, property management companies, and so on. As we do that, we will get more expertise in different asset classes, and we'll make our products for these different customers even more customized. What we see here is a segmentation of the REITs in different national markets, we see that the US REIT market is the only mature one. So there's plenty of room to grow. For REITs in countries like Bahrain, Brazil, Malaysia, Mexico, the future will mean moving up from nascent status to emerging status and from emerging to established. And we will be there for these REITs markets as they progress. As they will grow, we will grow.
Let's look at how we'll get off the ground. For the rest of 2020, our priority is customer discovery. We'll try and acquire a domain expert in the real estate industry as an advisor, conduct some observational research into how REITs go about their investment decisions. Based on these insights, we'll look at 2021 at building our prototypes, specifically the models that underlie our product and the interfaces that they will go with. Assuming we hit this goal, in 2022, we'll be positioned to acquire our first customers and then push towards acquiring a few more and understanding our product market fit based on our retention rates, customer acquisition costs, and long-term unit economics. At Climate Risk Intelligence, we believe we have the skills to execute this plan. Dante brings his real estate analytics capabilities and his energy resources PhD to the fore. Rahul and Junzi bring their hydrology and machine learning expertise to build the underlying models. Vivian and George bring in the regulatory and the economic frameworks for our product. And I, as a product manager, will bring out the software and take it to market. With that, panelists, we hand it over to you for feedback. We'd love to understand what went well, what went wrong, and what we can do better. Thank you so much.
Thank you. And just representing the cheering crowds again. Well done. Great presentation. And we'll start with Manny this time.